Hey traders, it's Heather and this is your nightly video. I'm going to start out here with SPX, and really there's not a lot to talk about in terms of where it's gone this week. In fact, if we take a look right here, today's range was only 19.78 points. Couldn't even break out to 20 points. Yesterday, very similar story. It only had a range of 40 points, which is still incredibly narrow. Let's take a look at the 30-minute chart so that you can see what it's been doing. So this was yesterday right here. This was today right here. It's really just been trading sideways right around 6,900. Major psychological level. Also happens to be right where the daily 5 is. So not a whole lot going on. If tomorrow wasn't the last day of the year, I would say we could probably expect one more range-bound day, which would be perfect for an iron fly centered at 6,900. However, tomorrow is the last day of the year, and what typically happens on the last day of the year is we see some selling. Tends to be a bearish day, which absolutely makes sense if you think about it, as traders, really investors, are selling off losing stocks out of their portfolio so that they can get any tax advantages of that to offset any gains. So that tends to be why we see the selling on the last day of the year. But I want to point this out. Just because that's what we typically see doesn't mean that that is absolutely what will happen tomorrow. So wait for your signals. A statistic or a tendency is not a setup all on its own, but I do want you to watch out for it. So where do I think SPX could go if it does sell off tomorrow? Well, I think that if it came down to the daily 21, which is at 68.50. That makes perfect sense. Nice little pausing point as always. Nice little psychological level, and totally a normal range for a day in SPX. So wouldn't be surprised to see that at all. Now, what happens if it keeps going further? Well, right below that, what I have is this weekly L1 on the quant pivots at 68.33. Here's the thing though, I don't expect SPX to actually hit 68.33, though it could. Usually what we see on the quant pivots is not that they hit those levels. They're not targets. They tend to stay within the range of the H1, which is up at 69.86, and the L1, which this week, as I mentioned, is at 68.33. John Carter likes to call this zone the sandbox. It's just where price likes to play. Now, these are the weekly quant pivots that I'm talking about. So next week, they'll be totally different. But I'm just pointing out this little L1 right here, because should price dip below the daily 21 tomorrow, I don't expect it to go too much further, because price usually doesn't hit that L1, really doesn't close the week below it. So just something to watch out for tomorrow. Now on Friday, I think maybe at that point we get a little bit of a bounce, nothing major. January, I'm going to be bullish though. January, I'm going to be bullish, and maybe we actually finally get to that 7,000 target that so many bullish traders have been calling for probably the last 6-7 months. So many traders, myself included, have been saying that 7,000 is going to be the high into the end of the year. Didn't quite get it. We got 69.45. Close enough. Am I right? unless you had a trade on that was specifically targeting 7,000. But you know what? It's been a great year, and I think next year is going to be great too. So I'm not mad that we didn't hit 7,000. I think it could happen in January. All right, so let's look at some specific trades. I want to show you Google because we just got into Google in the small lots trading room today. I opened up a 10 wide butterfly targeting this fire line right here at 328. Also happens to be this all-time high right there. So we went out into the January monthly expiration, opened up a 10 wide butterfly centered at 330. So it's going to be 320 by 330 by 340 on the call side. We paid $1.60 for it and we got 2. So the total risk on this trade is $320. Here's the important thing to remember about butterflies is if they don't work, they can go to zero really fast. So it's important that you size properly so that if you do lose the entire amount, you are comfortable with that loss. I am totally comfortable with a $320 loss. If you are not, if you have a smaller account, you could just do one and only risk $160. That's one way to do it. If you have a larger account and you want to do 10, by all means, don't let me stop you as long as you're okay with that risk. What I plan to do if the trade goes in my direction is I will take one off for a double. So 320. That way, if the second half ends up going to zero, and I would try to avoid that, of course, but if it does go to zero, I actually haven't lost any money out of my account. So that's what I would do for the first half if the trade goes in my direction. If it works out really, really well, and I can get $5 or $6 to close out the second half, I'll be pleased with that as well. So we'll just have to see what it's going to do. But right now, the stock on, or the chart on Google looks absolutely fantastic. Has a nice low compression squeeze on the daily chart with momentum shifting higher. Also has a 30-minute squeeze, an hourly squeeze, and a 2-hour squeeze. So when I got into this butterfly, it was really at the end of the day. I want to say it was in the last 15 minutes of the day. So my guess is you could probably get into it for the same price or a very similar price if you like this trade idea as well. All right. Thank you so much for watching. That's it for me tonight. I wish you all the happiest and safest new year, and I can't wait to see you next time. If you liked this video, make sure to like and follow.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me